The fact that markets look normal. You look at a chart, you look at the stock market, nothing's on fire, right? You look at the price of Bitcoin, everyone's like, this is an extreme bear market. No, it's not. Bitcoin's at $88,000. Oh, this is a bull market. No, it's not. Everything feels normal. But it's that normalcy that we all know in our bones is unnatural. Now, for Bitcoin, it's not only different, it's the opposite. It doesn't matter how high you get the price. The monetary policy physically cannot change. And so the distribution of new coins to people that are in demand for them, which is what price discovery is, comes from the market.
Markets appear calm on the surface, with stock charts showing no signs of panic and Bitcoin holding steady around $88,000. This level sits comfortably between bull market highs and extreme bear territory. Neither euphoric nor disastrous, just routine enough to blend into the background. Yet that very normalcy feels off profoundly, a quiet unease that gnaws because everyone senses the underlying unnaturalness despite the steady prices. Bitcoin stands apart, operating in almost direct opposition to traditional markets. No matter how high the price surges, its monetary policy remains physically locked in place, immune to tweaks or interventions. New coins can't be printed at will. Instead, distribution to those in demand flows strictly through market mechanisms. Price discovery truly means pulling supply from existing holders who decide to sell, creating raw, unfiltered shifts in ownership driven by genuine scarcity. In his latest Bitcoin podcast, Jack Mallers pointed out how this fixed structure makes Bitcoin revealing in ways other assets aren't. While stocks and fiat can mask pressures with policy moves, Bitcoin's behavior lays bare the real dynamics of demand and conviction. As we bring you clips from his latest market analysis, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the rest of the video.
Gold, which we'll talk about in a second, made another all-time high last night, along with silver. So silver and gold continue to march, continue to tell us that the world is being repriced, the world is being recollateralized. The current fiat experiment is collapsing, it's ending, and we are entering a new monetary era. However, Bitcoin is not making new all-time highs. In fact, it's not really moving at all. And so what I want to talk about is just explain to you guys what is happening, because the kind of overwhelming, energy, the questions, just the general feel in the room, the room being the internet, the room being my Twitter timeline, is what the hell's going on? Why is Bitcoin not moving and gold moving? What the hell's going on? Where's all the volatility? What the hell's going on? It feels like everything's collapsing, but nothing is collapsing. It feels like everything should be screaming and going up and there should be chaos, but there is no chaos. What is going on? Okay, so the first chapter, volatility was suppressed, not eliminated. And this is a very important point, okay? My point here is markets feel calm, but at the same time, nothing feels stable. I think there's an overwhelming feeling in society at large on the streets. And that if you look at price charts, I mean, Bitcoin's relatively flat. Nothing's wrong with the stock market, okay? But nothing feels normal. We have an affordability crisis. No matter what you want in life, it's becoming increasingly unaffordable. And so first and foremost, the fact that markets look normal. You look at a chart, you look at the stock market, nothing's on fire. You look at the price of Bitcoin, everyone's like, this is an extreme bear market. No, it's not. Bitcoin's at $88,000. Oh, this is a bull market. No, it's not. Everything feels normal. But it's that normalcy that we all know in our bones is unnatural. The feeling in the streets is depression, chaos, anger, riots, crime. Okay, this tweet from Tyler I love. The boomers got no idea how radicalized Gen Z has become. Low implied volatility in asset prices aren't showing the vol. The volatility has been transmuted into the social contract. The world is going to get more dangerous from here. While first turning institutions are beginning to be built now, they won't take over until the fourth turning institutions officially crumble. A lot of instability is on the way, but that doesn't necessarily mean the government won't paper over the assets. So first, I just want to establish the elephant in the room is that it feels depressing. It feels scary. There's a lot of political infighting. There's been more assassination attempts now than any other period in U.S. history outside of the mid-1800s, which was the Civil War, which I'll get into in a second. So markets are okay, but people aren't. And again, guys, I need you to conceptually and philosophically understand the fact that volatility is natural. Okay? When people say, oh my God, Bitcoin's so volatility, how do you deal with that? I'm built to not have to live within the lies. I'm built to be free. That's true freedom. I am one, listen, and I know the people listening to this be like, God, this guy's dramatic. No, I'm one with the universe. I'm one with truth. I'm one with volatility. Give me the grass that isn't fake and fertilized and bullshit. None of that LA Kim Kardashian grass. Give me Mother Nature. You feel me? Not literally. You know, I don't have a yard. I live in a condo, but if I had a yard, I would probably make it look nice. My girl would probably want that. But you guys get the philosophical point. Okay, so chapter 2 is AI is deflationary and the system is inflationary. So this chapter, I'm really trying to describe to you guys the current problem where policymakers and central planners, so meaning central banks, central planning institutions, and the government, they're trying to strip the volatility and keep things calm, but that pressure is then realizing itself in the everyday people. Where is the pressure originating? What is the problem? The problem is technology is naturally deflationary. The system we're in, though, is naturally inflationary. And so these two ideas are colliding, and they're colliding at a very fast pace. The point is, if an extreme deflationary event takes hold in an inflationary system, liquidity gets tight. Okay, that's the point. And I've said this many a times on this show, unless they print a gargantuan amount of money, everything is tightening. We're reaching the end of the road, dead end, okay? You have immense deflationary technology meeting an extremely highly levered financial system. And there is no prolonging it. We are reaching the end, like we have to monetarily reset somehow, whether that's revaluing gold on the government's balance sheet. Things like gold, things like Bitcoin have to reprice higher. We're going to have to change the way we think about unemployment. I mean, we have reached the end of this experiment. And so how is this realizing itself in Bitcoin? Very interestingly, guys. So this is the realized value breakdown by age, okay? Realized value meaning coins as they're sold. And I want you guys to take a look at something. If you look over here on the far right, first of all, you can look and see when Bitcoin is going up in price, and you can see, but what you can see is the line above the colors is obviously Bitcoin's price, okay? And what you can see is when Bitcoin's price goes up, you see a spike in people selling. And let me just firstly explain why that is not only expected, but really cool. It's really cool because Bitcoin's supply has to come from the market. When you have something that's literally fixed in supply. So gold is scarce, land is scarce, but scarce is not fixed. If the price of gold goes up, we can mine more.
Gold and silver hit fresh all-time highs recently, signaling that global assets are getting revalued and backed by harder money as the fiat currency system winds down. Bitcoin stays flat, sparking confusion online about missing volatility amid a calm market surface. Prices look steady. Bitcoin's chart barely budges, stocks hold up, but everyday life feels off, with an affordability crunch hitting everything from housing to basics. Society simmers with tension, rising crime, riots, anger, even more U.S. nation attempts than during the Civil War era, and Gen Z growing radically disillusioned. Volatility hasn't vanished. It's shifted from markets to the social fabric, making streets feel chaotic while policymakers print money to smooth asset prices. Central banks push inflation to tame swings, but technology like AI drives natural deflation by slashing costs and boosting productivity. This clash tightens liquidity in a debt-heavy system, forcing a monetary reset, maybe revaluing gold or Bitcoin higher. Bitcoin's realized value by holder age shows spikes in selling when prices rise, which makes sense for its fixed supply. Unlike gold, where higher prices spur more mining, Bitcoin coins must come from existing holders.
Now, for Bitcoin, it's not only different, it's the opposite. It doesn't matter how high you get the price. The monetary policy physically cannot change. And so the distribution of new coins to people that are in demand for them, which is what price discovery is, comes from the market. And so Bitcoin has this really fascinating but violent price discovery mechanism where it enters the stratosphere and it just keeps going and keeps going and keeps going until it meets not gold found on Mars, until it meets existing holders getting off their couch, going to their cold storage device and depositing to an exchange and saying, fine, this has made me so wealthy. I'll take some of these sats and I'll exchange it for a house. I'll take some of these sats and I'll remove all debt in my life. I'll take some of these sats and I'll buy a professional sports team like Tether's trying to do. You see? And so it's a really interesting pattern. And if you look at charts and you look at when coins are met at the market, it's pretty fascinating. And so Bitcoin does this violent price to the up, and then it meets enough of getting coins out of the existing market and redistributing them. And the way I conceptually like to think about it, actually, I love this philosophy, is that a lot of early Bitcoiners, these are libertarians, these are cypherpunks, these are engineers. A lot of us normal people that got into Bitcoin decade plus ago, we don't have the professional sports teams or the beautiful houses on the ocean. We didn't have any of that shit. But as time goes on, the people that have all the beautiful houses on the ocean, that own all the professional sports teams, that have all the private planes, they need Bitcoin. And so there's a very natural exchange between the cypherpunks, the libertarians, the open source developers, and the people that have traditional wealth. And I'd like to think that in the decades to come, the people that have traditional wealth that need new wealth are going to need to basically exchange old assets to the revolutionaries, to the ride or dies, to the cypherpunks, to those that dared to fix the biggest problem in the world, which was the money. People say, why are early Bitcoiners rich? That's not fair. No, early Bitcoiners gave an idea, time and energy when no one else would. That's invaluable to the human story, because if they didn't, this thing would have died. Give that a moment of silence. So anyways, back to my episode. So what we see on the far right is older coins selling, and there's been some redistribution, okay? And you can see visibly marked in the chart here where $1.5 billion a day, $1.25 billion a day, $1 billion a day, less than $1 billion a day. But the point is, we've seen sustained selling in size and some of the coins being older. Okay. And I want to acknowledge, some people say, oh, it's people selling covered calls. It's definitely not. Sorry to burst everyone's bubble. Everyone wants a villain. Everyone wants a common theme. Everyone's like, oh, the problem is, humans share this natural state of we can't change the past, we don't know the future, and all we have is now. And it's a very terrifying feeling to be in that lack of control. And so what you see on the internet is everyone trying to assert control, whether they know it or not, by simplifying the universe into one common idea. Oh, Bitcoin's price is because covered calls. No, no. If only the universe were that simple. If only we had control over what is naturally volatile, what is naturally entropy. You see the common theme I'm trying to instill here philosophically? And so anyways, we move on. And you can see from this chart, realized profit and loss, pretty interesting. How much realized loss people are having. So people are under this. The point is, this is extreme bear market activity. And what I'm trying to distill in you guys here is that we're seeing extreme bear market activity in the data, not necessarily in the price. I wouldn't say 88,000 is an extreme bear market. Being 30% off highs is normal business as a Bitcoiner. Bitcoin's telling us the temperature. Gold is like getting short-term relief. You don't want to sit in the burning house. The house is burning. To get a little relief, okay, China is running these $1 trillion trade surpluses, right? Russia has gotten sanctioned off the fiat financial system. Central banks have to recollateralize themselves on something besides sovereign debt. They're getting a little bit of relief by opening the window. Now, opening the window means a $10 trillion asset is now a $20+ trillion asset. Don't get me wrong. I'm not trying to play down the extreme of gold being $4,500 an ounce. I'm not trying to downplay that. But what I'm telling you is it's like cracking the window, okay? Bitcoin is not like cracking the window. Bitcoin is telling you the temperature. They're two fundamentally different things. So gold relieves pressure temporarily. Bitcoin becomes important when relief no longer works. And so we're in this interesting period where it's been openly admitted we have to lower interest rates. We have to stimulate growth. We have to reindustrialize. We have to redefine and rethink what the West is. We even have seen reports from the United States saying, do we need to be the world reserve currency? Were the economic policy decisions made over the last 40 years mistakes? And so to carry my analogy, I write at the bottom, eventually we either need to fix the HVAC or get the out of this house because it is burning. And so gold is relieving pressure temporarily for now. And not to say it won't in the future, but what I want to invest in is bigger than that. Or what I want to lead, the revolution I want to be a part of. So I came up with this line. I was like, damn, this is so good. I want to tweet it. But I didn't because no one would understand the context. But as gold buys time, Bitcoin tells time. You see, once I went on a rant on an early version of this show when I used to record it with my dad, where I said, Bitcoin's not a hedge, it's a solution. You see, gold is a hedge, Bitcoin's a solution. So why is gold leading? Why is gold repricing now? Because everyone's cracking the window. Trump has not got his new Fed chair. We have not officially started QE. We're in this weird era right now where they're trying to paper over the volatility and keep things calm. We haven't seen the liquidity. We haven't seen the reindustrialization yet. And Bitcoin's just telling us the truth.
Bitcoin drives its price upward through a raw discovery process, climbing until longtime holders finally unload portions to meet real-world needs, paying off debt, buying homes, or even acquiring sports teams, as Tether is rumored to consider. Jack Mallers describes this cycle as violent but perfectly natural. Old coins emerge from deep cold storage, hit exchanges, and shift ownership in an asset whose supply cannot expand. Unlike gold, higher prices don't trigger more mining. Bitcoin only redistributes what exists. Market charts consistently show these bursts of selling from long-held coins during major rallies. Recent data highlights sustained outflows of older Bitcoin, roughly $1.5 billion a day falling to under $1 billion, signaling heavy realized profit and realized loss activity typical of deep bearish pressure, even while prices around $88,000 now seem almost normal, just 30% below all-time highs. Early adopters, libertarians, cypherpunks, engineers, are trading decade-old positions to traditional wealth holders who need Bitcoin to secure oceanfront estates, private jets, or entire sports teams. Mallers casts these early holders as monetary revolutionaries who bet on a broken financial system before anyone else would, and who now earn their reward. Critics look for culprits, covered call strategies, market manipulation, but he dismisses that impulse. People simply want a sense of control in a world shaped by natural volatility and entropy. Gold provides temporary comfort, like cracking a window in a burning house fueled by China's surpluses, Russia's sanctions, and central banks abandoning sovereign debt. Bitcoin instead reads the full temperature. The US openly acknowledges rising competition from China and Russia across technology, manufacturing, and military power, prompting calls for lower rates, reindustrialization, AI dominance, and even doubts about dollar reserve supremacy. Gold can hedge for the moment, but Bitcoin reveals the underlying reality. With markets smoothing volatility ahead of a new Fed chair or potential QE, gold leads for now, but Bitcoin shows the truth beneath it all. These forces won't restrain Bitcoin's trajectory. They'll define its next explosive rise. Does Bitcoin's steady price around $88,000 mask a deeper market unease, or is this calm the new normal? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.